Kiwi dollar daily forecast, July 27th, fxempire.com. The Kiwi absolutely skyrocketed during the Thursday session with the central bankers taking center stage, especially uh, the central banker, the head of central bank, Mario Draghi out of the ECB, essentially coming out and explaining to the world how he was willing to do whatever it took and do essentially anything to keep the euro viable and alive. Well, this really, I'm not sure why this was news, but evidently it was. And as such, the markets reacted. And having said that, it does kind of concern us as we think that there's a little bit of an overreaction. It's possible that we may see continued strength in the risk on trade at this point in time, but the odds are that the market will fade this. Now, looking at the move that we saw for the session, you can see that 80.50 is the absolute top of resistance, and because of this, it's worthwhile perhaps thinking of taking a short position based off of a shorter time frame. It's nice and simple. It's like paying for information is one way to look at it. The reality is you can risk, and when you do take a trade, you risk a small portion of your account to find out whether the currency pair, in this case, is going to go up or down. So what we're prepared to do is take a small short position, and we get rewarded if it falls, obviously. And if it does not, and it goes up above and breaks through the resistance and everything, well, that small portion of our account pays for the information on how to go or what direction to go. And instead of taking the loss, we simply will reverse our trade and go long, as the Kiwi has been fairly resilient. We do have to admit overall. So, having said all of that, we are in an interesting situation where if we're willing to commit a little bit of capital right now, we could find out which direction this pair wants to go, and that could be very profitable.